Good evening, everybody. Those were pictures of Keuka Lake. Okay. Yes, those were images of what we look at during our breaks. So anyways, okay, market decent day. We're now just breaking out through this downtrending channel, which if they can keep this up above this level, gives us a good prospect of being in wave three. Wave three, this move up, profit taking, move up, profit taking, move up, more profit taking, but good prospect that they could move it up here, get back into this trend channel, and then continue to move it up from that level. The S&P, kind of same scenario, except it's shown a little bit more resilience, and the fact that they gapped this up from dojis, left-right combo, and now they've pretty much gapped up through this downtrending channel. If this opens positive, doing a doji sandwich tomorrow, it's going to be very, very strong. Very strong evidence that we're going to be up in wave three. And the Nasdaq, yeah, I saw that Alcoa was above earnings expectations. So we go into another positive earnings season. This market just is going to should keep right on going. So this definitely was not a year where you sell in May and go away. That's why it's always good to have candlestick charts to see what's actually happening versus what is expected to happen. So the Nasdaq on Friday traded up above this level. Notice it gapped up a few times to get here. Also gapped up to get through this level. Even though it was saggy today, let's make this bigger. You can see the colors. It was still telling us that they were trading up above this level and planning to stay there. Trading down a penny after hours. All right. Well, so much for that theory. All right, what else we got? Interest rates look like they're trying to bottom, meaning the rise in interest rates. Bond prices trying to bottom, interest rates trying to at least come back up into the trend channel. Interest rates have moved up. Now we're looking at a possibility where they might be bottoming out. Let's say crude oil is still in a very strong uptrend ever since it broke this trend channel. That's why trend channels are important, to see what type of action you have once you get to a top or a bottom of a trend channel. We can see with much more clarity what type of activity or what type of strength there is breaking through those levels. The dollar getting a little bit toppy, not a sell signal, but indication that notice how far away we've moved away from the T-line, and we're right here at the same level it topped out before. So that could be a little bit telling that the currencies might be in trend channels. Also looks like we could see some bottoming out here of the Japanese yen, with it being somewhat of a little trend channel. And what else do we need? Oh, gold. Gold's still in this downtrend. Can't get up above the T-line. Same with silver. Silver seems to be in a downtrend. Also can't get up above the T-line. The T-line, yes, is the 8 exponential moving average. All right, what else am I looking at here? Dollar, crude oil, gold. I guess we got most of them. All right, some of the stocks, the reason we're in them is because of the patterns. Here is Reggie. Reggie, we were anticipating would break out fairly soon, and it did a nice move today. Kind of consolidated a little bit in the early trading, and then when it broke out through this level, told us that now we're in a next wave. So this one should be in a good uptrend. AEGR, ever since the bullish Harami gap up above the T line, all you need to do is stay positive on this one. This one, if it breaks out through this level, puts us into a wave 3. SCTY bounced right off the 50 with an inverted hammer, bullish confirmation above the T line. Now that little J-hook type pattern. This one should have a good possibility of moving back up to test the recent highs. This is not an uncommon pattern. To move up strong, consolidate all the way back to the 50, and as soon as it gets back to the 50, that's where everybody's starting to buy, and they send it right back up again. ENPH. Somewhat the same going on here where they bounced off the 50, came back down into the 50 area, came up through it, came right back down. Now, if this opens positive tomorrow, you definitely want to buy it because they're going to take this up into the $10 range. And GLT was another one that has that type of chart pattern. Let's make this a little bit more pronounced. Whoa. Had a nice uptrend. Pulled back smack dab to the 50. Bullish Harami, bullish confirmation. Now we're in the next wave up, and notice what they did to get to this next wave up. They gapped up through it, gapped up again. GLT is still trading 200,000 shares a day on a $27 stock. That's not real thin. That's decent trading, unless you're going in with 5,000 or 10,000 shares at a time. I mean, on this one, at most I'm in for 1,000 or 2,000 shares, and 200,000 shares, 1,000 or 2,000 shares isn't going to bother getting in and out of this trade. And our YRCW, all you can do here is stay long as you see the uptrend in progress. Still showing us a little bit of resistance here. But if it breaks up through this level, it tells us we're probably up consolidating, and then the next up move. And notice that the reason it's consolidating is because this is not a pullback. This is profit taking, and as you can see, there's not very decisive trading going on in here. SCTY bounced right off the. We started with that one. Okay, but this one with calls, this one should have a nice strong price move to it. SNTS, I think David L. pointed this one out today. You've got a double bottom, pretty much supporting right here at the 50, and left-right combo, a close above, the slow curve, and then a gap out through this level. That tells you there's strong evidence of buyers taking over. This one still should have some more upside, hopefully on the same magnitude as that move right there. But when you can start adding up everything going in your favor, a left-right combo right on the 50, a double bottom, a slow rounding, slow curve, doji gap up through the resistance level, stochastic still heading up. That tells you that's all the evidence you need to tell you you're in probably a very strong position. SBGI is another one that we've been trading. it came out of this little rounding bottom after a kicker signal that sent it back up on its uptrend. So this one would anticipate there's more upside. And what else we got here? SRPT, that slow curve, gap up through this level. So again, this slow curve tells you things are building up. When they can gap out through a resistance level, you pretty much got the evidence that the bulls are definitely in control. Not only in control, but want to get back into this with great enthusiasm. Those are exactly the type of positions you want to be in. CHUY. Again, that slow curve, doji gap up through the resistance level, gap up again. I would suspect they're going to take this right up until you hit the same magnitude as this move right here. And notice how this move right here started. Bullish Harami, bullish confirmation right off the 50. Stochastics curling back up. Then you've got your slow curve, gap up again. So easy to see a wave 1, a wave 2, going into wave 3. Okay, let me see. Sohu, another one that was setting up nicely. Right off of 50. There's your left-right combo. Now they've taken it up, testing this area. 1 big day, 2 big days. Now they usually see 3 big days. So the third day would tell us if they broke out through here, we're in the slingshot effect of kind of a scoop pattern. But same analysis. They bounced it off the 50 with a fry pan bottom. Broke out nicely. Now have moved back, and you've got a scoop type pattern supporting right on the 50. And starting with a left-right combo, starting the next wave up. If they break this level, that's the type of price move you're going to get. What is a left-right combo? That's a doji followed by a bullish engulfing signal. The doji, that little left jab, indecisive, then they come with the power right behind it. That tells you which way they're deciding to go. JNY, kind of this little scoop type pattern breaking out. This one can be bought on positive trading with the anticipation it's going to move up into this area, which puts you in the same trajectory, and then do a 45-degree off of there. It's not unusual when a stock's in an uptrend and it consolidates, that they move it right rapidly back up to the same trajectory that it was moving, and then from there move up, moves up in the 45-degree. LOGM, there's that little scoop pattern breaking out. This one you shouldn't be afraid to be buying. Wave 1, wave 2, slingshot going into wave 3. Let's see, some of the ones that we're still holding, SNTX. This one's just a nice mover. There's that slow curve. There's that doji right on the resistance level. Doji sandwich, if it opens positive, exactly what it did today. Yeah, we'll get to questions. Don't worry, I'm not ignoring anybody. Just trying to get through the ones that look good, and then we'll come back to questions. CYTK. Can't get below the T-line. Nice J-hook pattern. This is your classic. Fry pan bottom, breakout, strong price move. Strong price move, pull back, J-hook pattern. Just a high probability combination of price movement. And tear, there's your left-right combo, back up above the T-line. Wave 1 going into wave 1, wave 2 going into wave 3. And not so much distract. Sometimes we get off course. Don't worry, I will come back to everybody's questions. So Maxwell, right there at the breakout point. Notice where it bottomed, right smack dab on the 50. Came up, came through the 50, used it as support. When it was acting as support, where was it going to? Right to the 200. So sell signals here at the 200. Where's it going to? Right back to the 50. Now they've come up the second time to the 200 with still a lot of juice left in the stochastics. If they break out through here, somebody was asking today, do all gaps get filled? They eventually get filled. It may not be that week, may not be that month, may not be that quarter, but they'll come back and eventually fill those gaps. And CSIQ, stay long. There's that wave 1, wave 2, wave 3 action. JSO, this one you stay long, came up, came right smack dab to the 50, gapped it up through the T-line. Still stay long until you see a sell signal. JKS. Another one that came right smack dab to the 50, did kind of a little kicker signal, closed up above the T-line. Wave 1, wave 2, going into wave 3. And ESCY is one that we've been holding long term, but notice what started this last move. This slow curve. There's your double doji. Came up through the 50 and then just sprung out to the upside. So anytime you see that slow curve, I wouldn't be afraid to be buying, because usually the action is going to be a slingshot effect coming out of that slow curve area. And now CLDX came out, did a doji sandwich, pulled back today, probably a time of dark cloud. However, there seems to be a lot of strength after the breakout. This is the type where even when they close it back here, it should be closed out and or give it to the next day. If it opens and trades weaker, you close it out. If the uptrend is still as a result of this breakout, number one, and a result of the doji sandwich, which we know the result of a doji sandwich is more upside, I'd rather hang on to it and see if they open up positive and take it right back up positive, with this just being a profit-taking day. And UNXL covered this short position early today for one particular reason, because the market was acting positive. This should have been heading down, and they were just kind of hovering right in here. So as soon as they traded it down a little bit, but as soon as it came back up through the open or flat, I went ahead and closed out that short position, because we had stochastics not really rolling over dramatically, and the market heading up, and we were in kind of a bottoming area. That was too much risk factor for the reward. It was time to take profits. Fortunately, after that, unfortunately, got out at the right time. Just only because it looked like it was time to start taking profits on a chart pattern that had been strong to the downside, and then started showing some buying. It was just too much there to indicate they weren't selling anymore. Let's see, what else do we got here? We did GTN. That's been a good-looking chart. This one, wave 1, wave 2, wave 3 started with a doji. Gap up, your best friend. And this one is a very good-looking chart, Jamba. Right smack dab down onto the 50. Bullish confirmations, gap up today. This one you want to be buying on positive trading tomorrow. That's a very strong chart pattern. And here's another one. PGNX came down, consolidated. Now they've gapped up. If this opens positive tomorrow, you want to be buying immediately. That tells you that it's breaking out through all this congestion area. And now BONT, somebody brought this up today in the chat room. This one is probably one of your best stocks to trade because it does everything right as far as chart patterns. I've made so much money just trading this stock through the years, but notice what it did. When it came up away from the 50, started pulling back, it was time to get out, and then notice what it did. They couldn't get it down through the 50. Now they're taking it back up. Where are they going to take it back up? They're going to bring it right back up here and then go 45 degree, continuing the uptrend. And KNDI. KNDI, this one you want to keep an eye on because where does it come to? Smack dab to the 50. And where is that? Right about the same level they gapped it up. So if they start taking this one positive, you want to start going after it because you could possibly be getting in here around 560, 580 to come back up here to the 850 level. That's a heck of a good return on a chart pattern that is very identifiable. Let's see, we did GTS. How come I've got this one on here so many times? Oh, so this one's just breaking out above. There's your rounding bottom, gap up. Now you're through this resistance level. Stochastic's still in an upward direction. This one you can be buying on strength, telling you that they've broken out through this area. Lulu, little gap up, stutter step. Notice, and this was a case where you could start shorting it here, but the fact that they gapped it up today from yesterday's or Friday's close and started going positive told you we have a different pattern. We've got that stutter step because at this point we can see that even though they were selling it off, they weren't selling it off aggressively, indecisive trading. This told us that that indecisive trading is over. Our next move is probably going to be up right in here, coinciding with that peak. Fry pan bottoms, SN or SSNC. This one, you definitely want to be buying on positive trading tomorrow. You've got the slow curve here. You've got the big curve here. You've got a breakout potential right here. If this gets moving, that can move for another 5 points very quickly, taking you up into about the $39, $40 area. No, did we do Swift? Swift trucking is not coming up. Oh, hope we're not running into this situation. Well, bah humbug. Okay. The ones that already came up will come back up again. Okay, we're going to take a few questions here since we can't get the screen to pop up. So if you asked a question before, go ahead and ask it again. How important is the 20 moving average as opposed to the 50 or the 200? Margaret, most of the major money managers will trade off the 50 and the 200. That's important. When the 20 becomes important is when you have an extended trend over a long period of time. They'll start bringing it back to the 20 instead of back down to the 50 or the 200. It can usually be where the 50 and the 200, if it pulled back to those levels, that would be an excessive profit taking, whereas the 20 now becomes a support level. So the big ones are the 50 and the 200. A kind of a secondary one is your 20. How often do you see the 34? I use that for trading commodities, but not very often. It's just an added one in there that I may throw in there. But The 50 and the 200 are still, and the signals are still my main means of decision making. What do you mean when you say if it breaks above, opens above, gaps up, trades above? Usually any of those three. You want to see it gap up. Why isn't this? I just want to see this break above, meaning just start trading above. As it gaps up, that's even better. But if we start breaking above this level right here that we can see is kind of a resistance level, that tells you it's not a resistance level anymore. Lots of breakout patterns looking good, I guess, in these market conditions. Yes. And so that's exactly what we're looking for is the breakout patterns. All boats are going to rise in a rising market. Let's see. Is this still the... Well, this is just a fine howdy do. All boats are going to be rising in a rising tide. We want to find the boats that are going to pop up the fastest. And those are the ones that are usually coming out of a pattern that have extra bullish sentiment behind it. I don't know why this is doing this. This is just goofy. Goes all day long without any problems. Okay, it'll be back. Let's see. So anyways, we want to find the ones that have the, if we're in an uptrend, stocks are going to be in an uptrend, but we want to make as much hay as we can while the sun's shining. Okay. How do you justify low volume trades? I don't, Rich. I usually have set a parameter of stocks that are trading more than probably 200,000 shares a day, depending on the size of the account I'm trading. So if you've got $1 million account and each one of your positions is 80, 100,000, you don't want a $5 stock that only trades 200,000 shares a day. You want a $27 stock that trades 200,000 shares a day or better. If you're trading a $100,000 account and each one of your positions is $10,000. Now a $5 stock trading 200,000 shares a day, if you're going to put $10,000 or 2,000 shares, that's not going to bother you. What you don't want to get into is a $18 stock that only trades 90,000 shares during the day, because that doesn't really let you see what's actually happening in the price movement, because there's just not enough liquidity, one, to get in and out, or to see what's really going on with the price. Number two, it makes it hard to get in and out. Do you enter on intraday pullbacks? If so, where? Yes, I do, and I have no idea why these charts aren't working. SNTF. If I like this, and today, and this is the advantage we have with the chat room, is we've got plenty of people that know what good-looking chart patterns look like. In this case, David L. said he was buying this one. So I flip open the chart and say, would I be buying this one? Well, if I can see immediately that it's just gapped up through this level, after a doji, stayed above the T-line, after a rounding bottom, stochastic still heading up, yeah, I can pretty well speculate or prognosticate that this is going to move back up into the trend channel. So I've got a good trade going on here. So if it's trading up here, is it time to get in or is it pulling back? That's where I'll flip back to my 10-minute chart. And if I see something like this where when I saw it, it was trading right here, kind of pulling back, say, all right, I'll wait a few minutes to see if they pull back to the T-line. If they do, then I'll buy. Or if I see a situation like this, say, yeah, they've come back and tested the T-line, they're heading back up, that's when I'll go ahead and buy. So I'll let the 10-minute chart tell me when it's time to be buying. Well. Right now, I'd be doing July options because we know the market is moving right now, so we want to buy the stocks that are moving right now. So I'd rather go with the July. Now, after Friday, I'll probably, if that leaves only 1 week going into expiration, I'll start flipping out into the August. Or I'll see whether it's more economical or more feasible. Instead of buying a call, start selling the puts. If there's only starting Monday of the not this Monday, the next Monday, going into the last week of trading, because more than likely selling the puts, which will have premiums to the downside, if the stocks are moving up from there. But I don't think the market, and again, this is part of the market analysis. If I think we're getting near the top of the market, but there's still some more upside, at least a week's worth, I probably won't be buying the calls going into the week of the expiration. I'll be selling the puts just because I have the double advantage of there's a premium still built into the put price. If the stock is still moving positive, I get kind of a better return. Now we got this. Okay, finally. All right. Okay, yes, I'll see if I can give David L a green or something. If you say buy it now, would it be better to wait for the AM pricing? Yeah. If I'm saying tonight I'd be buying this, that means I want to see it open positive tomorrow, not trying to get it after hours. Do you enter intraday pullbacks? Okay. Yes. What do you mean by buy it now? Meaning I wouldn't be afraid to be buying it on a positive trading tomorrow. For example, this one. I wouldn't be afraid to be buying this now if it opens up positive. Now, there's some situations where people say, oh, should we be buying here? I might say, no, you want to be holding, not really buying at that point. But there's other places I'll say, yeah, I'd be buying this right now if it opens positive. And how much credibility do you give tweezers, tops, and bottoms? A lot. Yeah. If you're more than likely, you're going to see a reversal signal at those levels, which are usually hammers. But if you see a tweezer bottom, two hammers side by side, that's that much more evidence that that's going to be a reversal from that support level. Do you divide your positions equally? So let's say you have 100,000, you divide the portfolio 10,000. Yes. And the reason for that, Jeb, is the biggest flaw that most people have in their investing is their emotional decision making. I say most people. I'll use myself as an example. My worst drawback for my investing is my emotions, and that was probably a function of being one of the worst investors in the world before candlesticks came along. So part of that to eliminate emotions is if I have a $100,000 portfolio and I'm going to put on 10 trades, each trade will be $10,000. The reason for that is if I see something that looks spectacular and I decide, all right, I normally pay $10,000 for a position, but this one looks extra special, I'm going to put $17,000 in, which means my other positions start getting diminished toward $8,000. Where do you think I'm going to spend most of my time watching in that portfolio? It's going to be that trade with 17 when everything else is about half that. That does two things bad. Number one, 90% of your attention is probably going to be on that trade. Secondly, if that trade doesn't work the way you want it to, you've already put your emotions or your ego into that trade. So if it's not working, you think, all right, I've analyzed this because my brain's told me this one was going to work out. I'll give it an extra day or two so that I can see if it works out or not. And when it doesn't, instead of you saying to yourself, this unit of my portfolio is not working, you're sitting there thinking, my favorite trade is not working. I'm just going to give it a little bit more time, which usually means you're selling it 2 or 3 days beyond where you should have, number one. And number two, you spent much more time analyzing it to get into that trade. How many trades do you want minimum in an option? At least 5 days. What is your mix of long and shorts right now? 100% long. I closed out a couple of the short positions this morning when the market looked strong, like it was going to breaking out. And most of my short positions had good profits. I figured this was a good time to start taking profits. Let's see. We get so many good ideas why to go after low volume. Don't go after low volume. Anything that I've usually done on my scanning is based upon at least 200,000 shares traded. And when I'm putting positions in portfolios, depending on the size of the portfolio, if it's a decision of whether to buy a stock that trades 240,000 shares that has a good chart, or a stock that trades 1.4 million shares each day, I'm usually going to go with the 1.4 million. But I'm not going to disallow or deny going into a trade that looks extremely good that still may trade only 200,000 shares if it's a portfolio that I can still get, or I can have a position that's small enough to get in and out of that trade. Okay, Steve S plus symbol. Oh, that may have done it. I didn't think of that. On SNTS, do you buy the stock today? I bought the options only because of that was doing it in my option account or my little trading account. So when I saw this, I went and picked what I thought would be the best options based upon the math. And so I think even after I bought this today, it moved up well enough that I had a good $2,200 profit in it. Yes, about 2 weeks right now on July expiration. Don't options lose significant time value the last 2 weeks? Depending on the market conditions, definitely the last week. So that's why I usually try to close out on Friday if we're going into the next week and things don't look great. The reason for that is on Friday, there's a kind of a mental thought process that says, I still got another full week next week, so the prices don't get hit too hard. But on Monday, if things don't look good, everybody's thinking, man, they're going to expire this week. That's short. It's time to get out. That's where the price will diminish quite a bit. Do you exit your position the day before earnings report? No. Remember, the candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. And if tomorrow earnings are coming out and they're buying, that means they're making their decisions based on knowing that those earnings are coming out, but they're not deterred by the fact that your earnings are coming out. So I would probably guesstimate that my rate of return or being in the correct trade ratio going into an earnings report is probably 4 out of 5 times that position's going to work out very well. Not any greater or any worse than a normal not being in or being out of the earnings reporting season. So if that candlestick chart is telling me they're still buying, is it going into earnings? That tells me my probabilities are pretty good. There's something good going to happen from that earnings report. Now, are there surprises? That's why they call them surprises. And that's why you want to know when that surprise comes and the chart takes a different turn, you close out the position immediately if that's not what the chart pattern tells you that you should be staying in. But again, for every time I get hit with a bad surprise, I usually have 4 or 5 good surprises on the other side. Do you sell naked puts or do vertical spreads? Usually vertical spreads only to keep the margin requirements reasonable. For intraday timing trading, do you like the 10-minute the best? Your thoughts on the 5 and 15 minutes? I usually use the 10-minute chart. That seems to be my bellwether. If my 10-minute chart tells me that it looks like it's time to get in, see if I can do this. That's 60 minutes. If my 10-minute chart tells me it's time, that it looks like things are turning around, then I immediately flip to my 5-minute chart. Say, all right, what's my 5-minute chart look like? If I can see that my 5-minute chart is still working, that means my 10-minute chart is probably going to work. And when I get right down to it, if I see the 5-minute chart seeming to be working, I'll flip right down to the 1-minute chart. I don't know where that would correspond on here. But if the 1-minute chart is also telling me that things have a good-looking chart, then I can pretty much assume that my 1-minute, my 5-minute, my 10-minute charts are all telling me it's time to be buying. And that's not a long evaluation. That all takes approximately 10 seconds to go through 3 charts and see whether they're all setting up. Yes, I would say, Daryl, that probably 60% plus of my trades are spreads. And that's just because when most people buy an option, what are they thinking? Oh man, if this stock goes up, or this stock looks like it's going up, I'm going to buy the options. Well, the problem is you've got to get through the risk-reward factor of the bid-ask spread, plus the time movement or the retracing the cost of that option, and the time factor. So there's plenty of times where we can kind of evaluate where the stock price is going to, and so if there's a resistance level, that's probably a good place to be selling calls, buying the lower calls and selling the higher calls at a resistance level. Because what's everybody buying an option for? To get leverage. What do most people want to buy an option for? Because they're waiting for that big home run. But I would say 99.9% of the times that big home run never comes. And even if it does come and you've got an option spread on and it works, in my case, my minimum, if I'm going to buy an option spread that can maximize out at $5, I'm not going to pay any more than $2 for it. I want to make at least 2.5 times my money on that trade. Okay, let me get back to a few more here. Let's see, the fry pan bottoms. ABMD, and notice what it's done. It's come right back to the 50 and started back up. I wouldn't be afraid to be buying this one. You got that fry pan bottom, and it's showed it was supporting right here at the 50, like it did before. Kind of like it did before. So observe the obvious. Where's everybody buying? We can see immediately they're buying right here at the 50-day moving average. Victor, that's a good way to do it. That if you want to, and it also gives you an opportunity that if you know a price is going to move probably fairly quickly, that you hang on to the position, but you put on the option trade to take that quick profit and then kind of lower your cost basis. So the risk on each trade is then 1 or 2%. I don't know how you come up with those numbers, Heath. No, my risk factor is if I'm buying the calls, a lot of people say, where do you put your stop losses on your options? You don't. You put your stop loss based upon the underlying entity that you're trading. You're buying the options on this as a different way to buy this stock. If this chart pattern on the stock goes bad, you sell your options. Or you say, all right, if this comes back down through X, I want to close out my options because you're buying You're just buying a leveraged piece of paper to get into that position. Jitu, struggle with stops and exits. That's one of the major facets we're going to go through, that we do go through at the Tubulic training. That is just a function of learning how to trade well. What most people have a problem with is losing money. And they have to get their mind shifted around to that some trades you're going to lose money and other trades you're going to have winning trades. We've got candlestick signals and patterns that show us a high probability of being in a winning trade. We also have those high profit candlestick signals and patterns that show when that trade doesn't work. So a lot of people, I say a lot of people, myself, took me a while to get my mind around to the fact that not every trade is going to be a winner. And when I see it's not a winner, close out the trade and move on to another chart pattern where you're going to have a winner. And so a lot of people get hung up on each individual trade where it should be the portfolio. What is your total portfolio doing, not what is each individual trade doing? Okay, let me zip along here. So ABMD is a good-looking one. RAX is another nice fry pan bottom that has told us that they couldn't get through the T line or below the T line. Now they've broken out through the 50, done dojis up above the 50, telling you that they're not coming back down. If this opens positive and you have a double doji, they're going to take this one up into the gap area. And if they get into the gap area, that means they're bringing it all the way back up into this level to fill that gap. So the nice thing about getting into a fry pan bottom or any chart pattern is we know what the expected results should be. Now, how did that happen? Oh, because I typed it wrong. We know what the expected results are coming out of a fry pan bottom. At the breakout level, a good, strong price move. So there's been times where they'll open up positive and I get in, but then they close it back down and do a sell signal, which is exactly what it shouldn't be doing if it's breaking out. So you close out the trade right away and go on to something where the probabilities are in your favor on the next trade. All right, and SBGI, there's that slow curve breakout. This tells me there's going to be more upside to this one. So when I've got more upside on a trade like this, I could be buying the calls right there before the breakout. One of two things are going to happen. It's going to break out big, or it's going to fail. And if it fails, the probabilities of it failing aren't that great. But if it does, you get right back out of the trade and move on to the next one. Here's Ruckus that also got up through the 50. Now, this one faded back a little bit today and came back right back and closed down the 50. But this makes it a perfect trade setup. But if they come back up through today's open, that tells you the bulls are moving back away from the 50, breaking out through this level, staying above the 50. That's when they can potentially get up into this gap area and fill that pretty quick. No, the double line hasn't been drawn. No worry. We're going to finish up the questions when I'm done here. And then I'll tell Jim to do the double line. That's when you ask on your individual stock situation. There's a slow curve on bias, BIOS. This one you can still be buying because we've got the classic fry pan bottom, wave 1, wave 2, J-hook, wave 3 is going to be about the same magnitude. And PKD, there's that slow curve. And what did it do after Doji hammer? Broke out through this level. This is wave 1. Wave 3's got another point left in it. Good 20% return. SMA. That's soybeans. S.SMA. This one's got that little slow curve staying above the T line. There's your next target right there, kind of coinciding with this level. And NAT, NAT, when it pulled back after a strong Morningstar signal, started trading above the T line, couldn't pull back below the T line. Your next target's right here. And then if they break out through that level, you've got some good running room to get up to fill this gap here. But notice what we're identifying in this whole chart pattern. That you've been in a downtrend, and we can identify where the strong buy signals are and where the potentially to be in the right direction, the right time on the uptrend. CQB, Morningstar signal, flat breakout. Now you're back up into this trend channel. I would expect a 45 degree to come off of there, kind of the same scenario as this one, ABFS. I'm still holding this one because it gapped up. Now look where it is. It's right in this trajectory. You're probably going to be in a 45 degree coming off of here. And I'm just whipping right through some of these. Just going like grease lightning. Whoops. CCJ broke through this downtrending channel on a hammer gap up. Stochastic's coming back up. I'd suspect this one's going to test this level. If it does, you're in the next wave like this. But it's got a good 20% or 10% move just to get up to see whether it's going to break out or not. And EXH, there's that rounding bottom, gap up, breakout. This is just strong evidence that when the pullback wasn't very decisive, now they've gapped up and now pushed through this level. It tells you the bulls are back in control. And BTU hasn't, well, that's not what we want. BTU, kind of a little cradle pattern. Notice what we had here. Remember, one doji means indecision. A series of doji means greater indecision. And if they can have a big candle, flat trading area, bullish candle, that's your cradle pattern, which means there's an extremely high probability they're taking this one up. And I would think the first target is right back up here to the 50-day moving average. Where do you find stocks to trade, up or down? Very simple scans, RJ. I mean, very simple scans. It takes me less than probably 7 minutes to find 2, 3, 5 trades each day out of the 7,500 trading entities that I want to be in the next day. If I really want to fine tune it, I might take 15 minutes to find the best trades. And usually I'll come up with, I only need 1 or 2 because I'm not going to switch my whole portfolio on any one day, but I'm always looking for the best 1 or 2 because if I've got 10 positions on, I may have 1 or 2 that are running out of steam that probably should be closed out and moved into something else. So I'm always going to be able to find 1, 2, 3, 5, 7 excellent trades. Now I compare those to what I have in the portfolio. Just say, is this, if I, for example, if I own this and I'm seeing it start moving like this, I can say, am I better off staying in something like this or finding another chart over here like this on another stock that tells me my stochastics are up and my upside potential is much greater. ANAC, another fry pan bottom breakout. ANR, that's kind of your little stutter step. Buying, came up to the T-line, failed, pulled back. Now you have a bullish engulfing signal after the pullback. That tells me this one's probably coming right back up to the 50, which would coincide with this downtrending channel. CVI, another little Morningstar signal, a double Morningstar signal with a bullish confirmation. This one becomes a good trade because I would suspect they're going to come back up to the 50, at least test that level, and then see what it does from there. And ACTV is another one that shows very good support, came up through the 200, came right back to the 200. We could see what type of signals it was producing right here in the 200. Hammered, or a doji, hammer, and bullish confirmation. That told us they were taking it back up. But stutter step is where don't see it on this one, but it's where they come up, fall back a little bit, and then do another buy signal, starting that uptrend some more. Let's see. Are you using the T-line as your visual for a slow rounding bottom or something else? No, the T-line is a very simple concept. As long as you stay above the T-line, you're in an uptrend. So what we're looking for is a candlestick buy signal and a close above the T-line. If it confirms, you want to be buying because you'll be in an uptrend as long as it stays above the T-line. The T-line, through the years, we've had John Bollinger on here a couple of times. Dave Elliott had the mobile bands. Just everybody has some sort of trend analyzer. The T-line was kind of developed or discovered by one of my early private training students. He came back, showed us up, and said, "Look at this." I started using it, and I was making decent profits before the T-line. Now using the T-line, my emotional swings are much less, and my profitability is much greater. Very simple. If I see a candlestick buy signal and a close above the T-line, I want to be buying until I see a candlestick sell signal and a close back below the T-line. Are the trades you suggest in your AM/PM updates the ones you consider to be the strongest for the day? Rick, those are the ones that I consider the strongest the night before. If each night in our members area, you can go to stock picks, and there'll be 2, 3, 4 stock picks. Now, those stock picks aren't necessarily for you to go out and just blindly buy and sell as a stock pick. Those charts are to illustrate what looks good and the rationale. So that little 2 or 3 minute video on the stock picks is to kind of continue your education of keeping your eyes open for what looks good. Now, that doesn't mean the next day, if we pick 3 long positions and the market opens up down 100 points, that any of those 3 positions are going to execute or you should go after them. If I think the market's in an uptrend, you're probably going to see 3 long positions, or suggestions. If the market's in a downtrend, you're going to probably see 3 short situations. If the market's kind of choppy, you're going to see 2 longs and 2 shorts. And if the market opens positive, you probably want to concentrate on the longs. If the market opens negative, you probably want to concentrate on the short positions. But those go out late at night, depending on how fast I can get to them, usually around midnight Eastern time. So they're ready for you that if you go in the morning, you can at least see what some of the potentials are. Now, coming into the chat room in the morning, there's still a ton of potentials out there that people are also analyzing. So the nice thing about having a chat room that's all oriented toward one trading method is you're going to find some very good ideas that other people have come up with their scans that you didn't have to go out and find yourself, or that you may have not picked out as good. So I would guess right now about 50% of the picks that we have in the morning are based on what somebody else has kind of brought up in the chat room the night before or the previous day as a good chart pattern. So we've got basically 400 pairs of eyes or 400 eyes out there looking for good chart patterns. It's not ticker time, but yet you can explain VPR. We'll get to it. Okay. Okay, we'll do it. Am I doing this? PRT, inverse scoop, stochastics heading down. No, you don't have. You had the potential of an inverse scoop if it had come back down through the T-line. That's why it's important to see what a trend does at the T-line. As a gap up after doji, that results in a doji as opposed to a more solid candle. Still your best friend? Yes, you like to see a doji. Anytime you see a signal that has a doji involved with it. Usually the reversal is going to be that much more profuse. Yes, if I see a doji in the oversold condition, I want to see what they're going to do the next day before entering the trade. CYTK looks like bear kicker across the T line, open, but then reversed into a strong day. Would you have closed a long position on the open? Probably not, which we didn't, only because it opened lower and the market wasn't trading off. And the stochastics are still heading up. So this one, because of the pattern, no, I held on to it, not necessarily because I held on to it, because I was paying attention to other things. It would have had to close down here at the end of the day to tell me that they weren't able to get it back up above the T line. When you're looking at a signal or a situation, you got to also take a look at your confirming indicators. Are the stochastics rolling over? In this case, they weren't really moving. We still had kind of a J-hook pattern set up. So when it opened lower and started trading lower, that was a little bit scary, but we still had a J-hook potential that unless that J-hook potential was negated, meaning it closed down here, then that is when I would have gotten out of the position. Can you look at commodities, DBC? Fry pan bottom is usually a big rounding bottom, a big slow curve. Rounding bottom is usually a fairly quick one. And a rounding bottom can be part of that big slow curve. Let's see, what is DBC? Commodities index, okay. There's your inverted hammer, Harami, positive open. This one you stay long until you see a sell signal. Okay. With that, Jim, go ahead and do a double line. And hold on for 1 second. I'll be right back. Okay, Jim, I hope you have done the second double line. And some of you got a jump start here. Okay, we're going to go through a lot of these quick. Line, stay short. Anytime you see a doji gap down, you stay short. And in this case, you stay short until you see a buy signal and a close back up above the T line. Oracle, this one you can be buying as long as it stays above the T line. Notice how it was indecisive until we got to the T line, then you had your Morningstar signal and confirmation. So not only did you have a Morningstar signal confirmation, but you closed back up above the T line. Netflix looks like it's broken out of this little wedge pattern. This one you can be buying on positive trading as long as it stays above this wedge and as long as it stays above the T line. CLNT. This one you can be buying on positive trading tomorrow. Today they told you the selling may have stopped. The consolidation may be over after that initial pop-up. you want to be a buyer on positive trading. Coffee you could be buying on this one. Just kind of basing here, except you don't have a real strong buy signal yet. So you could be buying it, but I wouldn't. I'd be looking for something better. Sugar looks like it's probably hit the low end of the trend channel with a bullish Harami Doji. If this opens positive, we know at least they're going to bring them back up to the 50, and then back up to the T line. Then you can see what it does from there. Lean hogs got whacked today. I was long lean hogs and stopped out as it came back down through the halfway point, which is also the T line. But now they've taken this all the way back down to the practically the 200. With stochastics getting near the oversold area, I'd look for it to start bouncing because you got the strong price move that broke out through the trend channel. Bearish and not quite close enough to a bearish engulfing, back to a support level. Now you want to be a buyer if they start bringing this back up. THRX. This one you can buy on positive open tomorrow, a doji sandwich setup. WCRX. Another one, a doji sandwich setup with a Morningstar signal. If it opens positive, it's breaking out through this level, telling you that they're moving up into another wave. NBIX. Another fry pan bottom setup, bouncing off the 50. Indecisive trading tells you if they open this positive, they're taking it out through new territory. You can be a buyer. Q-Core. Another one. If it opens positive, this little wedge formation will be breaking out. Very indecisive trading right here, sitting on the T line. Amazon. The end. Amazon, stay long until you see a sell signal. Best Buy, another one that if it opens positive tomorrow, you want to be buying. It's breaking out into new territory. MBI, this one you can be buying on positive trading. Use the T line as your stop. But you have this little spinning top, gap up the next day, back up above the T line, breaking out through this downtrending channel. And BYD, Morningstar, this is what I call the stutter step. They took it up, hit first resistance, pulled back, and there was your stutter step with a new buy signal. That one will probably have more strength to the upside, especially after breaking out through this big downtrending channel. Away, there's another stutter step. They brought it up, pulled it back indecisively, now taking it back up. This one you can buy on positive trading. And VCLK, you can be buying this using the T-line as your stop. Just watch what it does once it gets to the 200. UNXL, this is the rumors around. They don't have any product. They're not going to do anything. That's why you watch what the chart does, because somebody knows something more than what rumors might be. So this one, if it opens positive, you want to continue to hold it as long as it doesn't close back below the T-line, kind of after a bullish engulfing signal today. WNR, left-right combo, another one that you can buy if it comes up through the T-line. It'll be confirming both the left-right combo and the breakout of the T-line. Buy this one on positive trading. Doji or hammer, bullish confirmation, close above the T-line, positive trading, takes you up out of this downtrending channel. And Valero, Doji, gap up, another one closing right on the T-line, makes it very simple. If it opens positive, the T-line's not acting as resistance anymore. Ruckus, pulled back right to the 50. If this comes back up through today's open at 1370, you want to be a buyer. That tells you that the fry pan bottom is still in effect. ARNA. This one, you stay short until you see a buy signal and a close back up above the T-line. I wouldn't be chasing after this one just yet. TWX, this one, if it comes back up through today's open, you want to be buying aggressively because you've got the fry pan bottom, and if it comes back up through there, telling you it's breaking out through this level. And Dow Chemical. This one you can be buying. Notice the whole series of indecisive trading down here, right on the 200-day moving average. Now they've made their decision. They're taking it back up. You want to watch the 50 because that's probably going to be where people are starting to make other decisions. Starbucks, just stay long as it stays above the T-line. Walgreens. This one you can be buying aggressively because you have the doji gap up through the T-line. There's your first target. Fill in the gap. There's your second target. If it breaks through there, it's coming back up to the top of the trend channel. Schlumberger. Buy on positive trading. Your stochastics, as you can see, are not in the overbought area. You've got the potential of a doji sandwich setting up tomorrow. JSO. This one, if it comes back up through today's open, you want to buy aggressively. Tells you that uptrend is going to take you probably back up to test that recent high. TEAR, we're still holding as long as it stays above the T-line. There's your left-right combo. As long as it stays above the T-line, it's going to be in an uptrend. Cray has a good setup. Oh, pshaw. Okay, soybeans. Well. Why the heck is this going on like this? There we go. Wheat, still in a downtrend as long as it stays below the T-line. CEX3. Soybeans did a big bullish engulfing. It has to get now through the 50. You're above the T-line. The stochastics coming up. I'd rather be a buyer once it comes up through the 50. And corn. Corn, same scenario. I'd rather pay for it once it comes up. If you're in a downtrend, you're in a downtrend until they close above the T-line. WPP, that's a nice J-hook type pattern. This one you can definitely be buying on positive trading tomorrow. Tiffany. Tiffany, this one you want to buy. Just have to make sure it gets through the 50 very quickly. Whoops. USO, that's the oil. Continue to stay long until you see a sell signal. This one had a green candle. I would use today's open as a stop. It shouldn't come back through that level. BTNR, that one's as flat as all get out. And one more from this group. FONR, stuck between the T-line and the 50. I would rather pay $6.75 knowing that it broke up through that level. Let's see, the euro. Euro is trying to bottom. Notice what started the downtrend. A bearish engulfing signal, gap down. Notice what may be ending the trend. A gap down, now you have a bullish Harami. If this opens positive tomorrow, they're going to bounce it back up toward the T-line. Goldman can be bought if it comes up through the 50. If it does come up through the 50, that's going to be a good sign for the rest of the market. Because when the biggies like that one are moving up, the whole market gets more confidence. SPG is one of the REITs. This one I wouldn't buy until I see a very strong buy signal. In this case, it looks like the 20 is acting as resistance. Let's see. IRBT. This one you stay long. So you see a sell signal and a close below the T line. We did UNX, let's see, MOS. This one you can buy on positive trading tomorrow as long as it stays up above the T line. Potash, same scenario. If this opens positive, you're going to have kind of a flutter kicker signal, which will be fairly strong. That will take you up to the 200. And MNKD. This one you can be buying on positive trading. You had your buy signals. You had your close above the T line. If they open up positive, they're still taking it up. Pretty much the same scenario as, what was it? Scotty. Took it up, came back to the T line, now taking it right back up again. And MTG you want to buy if it breaks through this upper level. I'd rather pay $6.55 for it knowing that it's broken out. And CPF. Woohoo! It's that CPF. That's a nice chart. I mean, that's just your fry pan bottom with a gap up to get there. Now a doji. If this opens positive tomorrow, they're breaking out into wave 3. That's a good one. And TRQ is still in a downtrend until they can close it above the T line. This one's very easy. Whoops. Now, a different story here. Hope I don't have that on some of the others. This one, you buy on positive trading. Notice the double bottom, the doji. Now you got the kicker type signal. Look for at least the move back up to the 50. Ford, stay long. Did a doji today. I'd use yesterday's open as my stop. It shouldn't trade back down through that level. And Dell, I wouldn't trade right now, not knowing what's going on. There's better things to trade than Dell. And AMAT having a hard time getting moved. It needs to come back up through the day's open to be real aggressive on the buy side. Jazz, stay long. This one you buy on a doji sandwich setup for tomorrow. CKG, another one that can be bought on positive trading, which would take you out into this fry pan bottom breakout into new territory. And YNDX. This one needs something strong. You can stay with it as long as it stays above the T line, but you definitely want to see it break out through this congestion area quickly, or you're going to be in kind of a sideways blase. ACAD, another one that needs to show strength from here. We've got kind of this wedge formation with nothing being confirmed one way or the other. Bank of America, this one you can be buying. It's broken through the downtrending channel. And U.S. Steel I still wouldn't buy. There's just nothing, not only no chart, but nothing that would show there's any great appreciation to the upside. Apple, as long as Apple stays above the T line, you stay with it. If it closed back below the T line, this downtrending channel is still going to be in progress. Goog, this one you can buy on positive trading. Again, that fry pan bottom breakout. And LNG, another one you can buy in positive trading. A doji sandwich. Notice how the T-line squeeze has brought it right back up through the 50-day moving average. That tells you that's not acting as resistance anymore. ACTV, stay long as it stays above the T-line. You had your fry pan bottom, your strong price move. your J-hook pattern. Look for, this is where you let the market tell you what the market is doing. This trend was stayed above the T-line the whole time until they pulled it back. Now they're above the T-line. They're going to keep this above the T-line the whole time. And DECK, another one that if they break out through the 50, you want to be buying because you do have this doji sandwich, which means there's going to be more upside. So your next resistance level is this one right here. If they break through there, then you've got some running room. AIG, another one that if it opens positive, they're breaking through this level, you can be a buyer on positive trading. VOLC, nice strong rounding bottom chart. Make sure your volume's good. Wouldn't be afraid to be buying this on positive trading. Came up, failed at the 50, pulled back, telling us the 50 is not going to act as resistance anymore, so that means the 200 is potentially our next target. NVTL, Doji, shooting star in the overbought area. I would use this level right here as a stop. If it came back down through there, they are now selling this thing off. You want to be out of it. Zolt, flat as a pancake, but now might be breaking out. I would rather pay $14 for it knowing that it's gotten out of this whole congestion area. And RAI, notice the indecisive trading right here at kind of the resistance level. Now they've told you there's a different story. They've broken out of this resistance area. Now you're in the next wave. Hewlett, another one that can be bought on positive trading. It needs to get back up to today's open. HGG, S.HGG. Needs to get really moving. It's staying above the T line, but as you can see, there's no steam in this. It needs to pop. It needs to show that the bulls are there, which would probably be breaking through this downtrending channel or trading up above the 20. DDG. This one I give an extra day because we're not in the overbought area, even though we had a dark cloud. Right here at this level, the castings are coming up, and we just came up from a gap up off the 50. I would suspect that this is going to open positive and trade positive and try to break out through this because you can see a wave 1, wave 2 right back to the 50. When they gapped it up off that 50, that told you somebody was anxious to get back in. You have some profit taking. If this opens lower tomorrow, you close out the position. It needs to open and start trading positive to stay in it. TMV, boy, this one's ugly after it close up here. If this one has to open positive to stay in it, if it opens lower, you've got a flutter kicker type setup, which is going to take you back down to the T line. And ENDP, this one you stay long until you see a sell signal. You got a doji sandwich setup. COG, this one I would rather pay $75 for, knowing that it's broken out to the upside. ISRG, another one that I wouldn't be long or short this one. It's, as you can see, it's stuck. There's nothing here to push it one way or the other. Victor, I will try to get to you tonight, he said for the 40th time. JCOM. JCOM, stay long. As long as it stays above the T line, you're looking for a breakout here. And YGE, one of the solars, no, Pashal, S.YGE. What does that do for it? Okay. Did it again. All right. Now, if we've already done it, it comes up right away. That's U.S. Steel. IOC. All right, we're stuck. So with that, let's call it a night. Don't want to sit around here waiting for this to come up again. So sorry if I've missed yours. Anyways, that's probably enough to fill everybody up for a while. So we'll see everybody back in the chat room tomorrow. I'll try to figure out why this thing keeps getting stuck. Anyways, everybody have a good evening.